Hello, welcome to Todd Miller TV. I've been asked by a bunch of you to talk about the ROI on investment properties, what some of the costs would be. So I'm going to take a very simple example, a very conservative example, something that would be applicable right now for the Las Vegas real estate market. Okay, so your entry cost, we're just going to call it $120,000. We'll just say that's what it takes. Total cost all in to go acquire a house. Okay, and with that you get $1,000 a month rent. Remember, this is just an example. These numbers could be different depending on the property, etc. Okay, so we're going to estimate taxes. You're going to have to pay property taxes. You're going to have to get hazard insurance on the property. Okay, you might have an HOA on the property. If you do, it could be as much as $180. If it's a condo, we're going to, for this example, we're going to say we bought one not in an HOA. And then management, property management fees. I just threw $100 in there. That's about 10%. So that's going to give you a rough number. So when we take our $1,000 a month, we have $728 a month net. Multiply that times 12, $86.40 a year. So you get $86.40 a year, money coming in off of your $120,000. That gives you a 7.2% return. So you're probably wondering, well, that's like not super great. It's not like ridiculous. Yeah, but what are you getting in the S&P 500, in your mutual fund, or in cash in the bank? Probably a lot less, especially when it's like right now, if you go buy a CD, you get maybe 1% interest rate on that money, right? Well, here's the kicker. A couple things. First of all, you might get more rent, right? This is a conservative example. Okay, we have some investors who paid $60,000 for houses and are getting $1,000 a month rent. A lot of those houses are gone, but somebody got them, and there might be an opportunity to, for them to flip those houses over, who knows. Okay, so you might get the house cheaper. Getting the house cheaper will raise this number. Getting the rent up will raise this number. If you live wherever it is you're going to buy the house, and you do the management yourself, meaning you don't hire somebody, you just take care of all the management, then this number is going to go up as well. Here's the real big kicker. Okay, see, we have a 7.2% number. Last year, year over year, in Las Vegas, the market appreciated 20%. So we can just add a 2 to that. So if you bought last year, you got 27.2%, okay, return, because you got 7.2% raw from the rental and 20% just because houses went up in value. I'm not saying you're going to get that in the next year. Who knows what's going to happen in the next year, but I thought I'd share some of the numbers. And of course, this doesn't take into account that you might have vacancies. You could also have repairs. Numbers can vary, of course, but I thought I'd share that with you. This way you have sort of a rough idea of what you're going into when renting a property. And there's some risks to this, but there's a lot of reward to it, which is why a lot of people do it. And of course, it's backed by something real, as opposed to a stock that could be worth nothing. This is backed by a house that you can live in, or that someone will rent. So anyway, I thought I'd share that with you. I would call this the investor numbers for a real estate investor. That is my update for today, and hope to see you on another video. Thanks.